you assessing the risk profile from the coronavirus on market participants globally?
Right now, we're like everybody else, waiting and listening to the scientists about how they're assessing the situation on the ground. But ultimately, why we think the market is really looking through this pretty well, and why it's probably smart to look through it, is there can be a wave, an absolute wall of stimulus coming out of China, and actually a wall of stimulus coming out of the United States as well, in the form of Federal Reserve rate cuts, if this does jump geographies or become more severe in any case. So we actually think the market's doing probably the right thing right now to look through it from what we know right now, just because the wave of stimulus that can come out of China can be pretty massive.
That, coupled with better economic data once again today, the consumer just seems to be optimistic and it's not going anywhere. Scott, would that have you bullish on equities still?
It does. It still has us pretty bullish on equities, and it's partly because of just the stimulus that we already have in the pipeline. Global central banks around the world have cut rates about 75 basis points over the last 6 months on a GDP weighted basis. That really is not quite in the price yet. You combine that with the unbelievably strong consumer numbers we have out of the U.S. continue today with the morning's numbers that you just read out, and that's got us pretty bullish on the market. The positioning situation isn't quite as strong as it was in the fourth quarter. In the fourth quarter, we had professional money managers kind of buying back into this market because they missed the rally in the fourth quarter. But we do have retail positioning and retail sentiment really starting to turn for the first time in about 12 months. And once that retail bid starts, it can continue for a long time. So we think there's going to be an underlying bid under the equity market in the United States especially.